As a professional tax preparer, one of the best things that you can do in order to increase your earning power from tax preparation is to be extremely familiar with Schedule A, which is itemized deduction. So what you'll find, and what tax clients find, is that some tax preparers are really only able to handle what's called short form or standard deduction tax returns. Okay, and standard deduction means that you're not itemizing deductions. So each year, the taxpayer, as we describe in your textbook, has the option to either itemize deductions or take the standard deduction. And tax preparers that are able to handle itemized deductions are able to earn more money overall, because tax returns with itemized deductions are more expensive. You're able to charge more because there's more expertise involved. So I want to go through in this video exactly how to itemize deductions on Schedule A, and exactly what impact that can make on the taxpayer situation, and then also as on your earning power as a tax professional. So let's go through first the overall idea of itemizing deductions. And to do that, let's use this tax summary page, which again is just a simplified version of the 1040. So we can look here. In this instance, our test account file, $50,000 of income from a job, and the standard deduction for a single person, test account is single in this case, is $5,700. So in order to benefit from itemizing deductions, this taxpayer is going to need more itemized deductions than $5,700, because remember, the bigger the deduction, the better the deduction. So you only want to itemize deductions if you're going to be able to get over this amount of the standard deduction. So let's take a look at how this would work. On the itemized deduction screen in Lacert is screen 25, but again, the concepts in this video are applicable no matter what software you're using. This is the software that we use, but the general principles that we're going to go through right now remain the same. So essentially what you're doing when you're itemizing deductions is, as noted, you're trying to get above, with the itemized deductions form, you're trying to get above that standard deduction amount, which in this case is $5,700. Now, usually a taxpayer with mortgage interest is going to use this itemized deductions form, Schedule A. So a homeowner, someone that has pays property taxes and mortgage interest, is almost all the time going to itemize deductions. So that's kind of a shorthand way to see who's going to be able to benefit from itemizing and who's going to be better off sticking with that standard deduction. Now, once you've determined that it's worth it to itemize deductions, or at least to test it out, it's fairly straightforward. In most cases, you're simply going to make a list on this itemized deductions form of all the deductions, each item, each deductible item, and you're going to see, does the total amount on the Schedule A add up to more than the standard deduction? If so, you're going to be better off using that itemized deductions form. So the first major section on it is medical expense. And remember, though, with medical expense that they have that floor where the medical expense is only deductible when it's over 7.5% of the taxpayer's adjusted gross income. So sometimes if the medical expense is kind of minimal, you won't pick up a deduction here. And let's see, for instance, for this taxpayer, in this instance, the adjusted gross income is $50,000. So that would mean that 7.5% of that is $3,750. So only when the medical expenses go over, the total medical expenses for the year go over that $3,750, is the taxpayer going to pick up a deduction. In this case, let's say that the taxpayer had fairly minimal medical expense of $250. You can still plug it into the program, but it's not going to pick up a deduction. It's not going to pick up a deduction on the actual Schedule A. Okay, so moving on now, your next main section is you can either take as a deduction on Schedule A the state and local income taxes or the sales tax. And we talk about this in your textbook. You're going to need to look at that section to understand how this concept works. In this case, though, I just want to point out a couple things. So let's look at the wages. Now, as the taxpayer is earning this $50,000 salary, right, they are having withholdings or income taxes taken out of their paychecks during the year. See, there was $2,000 federal income tax withheld, and then for the state tax, the California tax, there was $1,000 withheld. And also remember, California has that state disability tax, which in this case $520 was withheld from the taxpayer's paychecks. Now, the way Lacert works, our software works, which is kind of nice, is that the software automatically picks up and puts in the income taxes section, state and local income taxes that were paid as withholding. So it's going to show up as a deduction automatically. And let's take a look at the actual Schedule A. Actually, we're not able to itemize yet, but it's going to show up here as a deduction automatically because it's going to carry over from the wages. Okay, and in some instances, as it says in your textbook, it's going to be better to use the sales tax deduction rather than the state and local income tax. But it's either or. Moving on, the next major deduction that you'll see on Schedule A is real estate taxes, so property taxes. As we've noted, most taxpayers who have a home loan will itemize deductions. So you'll see property taxes, let's say, were $2,500, and you would take that off the property tax bill and add that in as a deduction on Schedule A. Another good deduction to pick up is this personal property taxes. The most common example of that is your car registration. Now note that you're only supposed to take part of the car registration fee as a deduction, and it'll note this part now, California does at least, on the actual DMV registration papers. It'll tell you the deductible amount. So let's say it was $125 for the personal property tax portion of the car tags. This one here, home mortgage interest, is the biggest deduction that you'll usually see on the Schedule A. So this is for home mortgage interest paid by the taxpayer. And let's say it was $12,500 for the year, okay? And that it comes off Form 1098. So Form 1098 is a form that the bank, the mortgage holder, will pay or will send to the taxpayer, and the taxpayer then should bring in this form to you showing how much mortgage interest was paid for the year, and you can then use this as a deduction. Okay, so you definitely want to pick that up. Moving down the line here, moving down the list of items that are deductible, you come to charitable contributions. So you want to ask the taxpayer, did you make any contributions during the year of cash? And let's say that it's $500. Make sure to always recommend that taxpayers keep records. IRS has gotten a little bit strict of late on this charitable contribution deduction. So let's say it was $500. You also, when you come down here, you can use non-cash contributions as a deduction within the rules of the IRS. So let's say that there was $250 worth of items. Say there was a TV and a couch that was given to Salvation Army, and the value of that was $250. Again, taxpayers should keep records on this, but you would want to pick that up as a deduction and add it on to the Schedule A. Okay, the next major section that you're going to see here is miscellaneous deductions. The majority of these deductions are work related in most cases. Okay, so you want to see if the taxpayer has work expenses related to their income, and you can see this here, subject to 2% AGI limitation. That's a similar idea as the medical expense limitation on the deduction, except this is 2%. So in order for that section, the miscellaneous deductions, to yield a deduction on Schedule A, it has to be over 2% of this adjusted gross income. So 2% of $50,000 would be $1,000. So if the total deductions in this section of Schedule A does not exceed $1,000 in this taxpayer's case based on their adjusted gross income, this is not going to show up as a deduction. But let's say in this case it does, the expenses for work and these other related expenses do exceed $1,000. We're going to go ahead and itemize those deductions. So let's say it's union dues, $952. Okay, let's say it's work tools of $752. and cell phone for work, $527. A lot of times when you're working with taxpayers who itemize deductions, they'll know in their own mind what their deductible expenses are. But at the same time, as a professional tax preparer, you want to ask these questions to find out what the expenses were that may be deductible to be able to be itemized. Okay, it's part of being a professional. So let's say that they also have uniforms. Okay, what's another common work expense? Let's say that they have some job education or job training, okay, that they had to pay for. Remember, it's always that the taxpayer has to pay for it in order to get a deduction. So this would be enough deductions to where it would be worth it to itemize this section, because remember, it's more than $1,000. You also always want to pick up this tax preparation fee as a deduction, because this deduction right here, it reduces the cost of your service as a tax preparer. So let's say that the person paid $175 from the prior year to do their taxes. That would be a deduction. Now there's a lot of other points that we could hit on in Schedule A. There's a lot of tricks of the trade, but this is a basic video, basic income tax course. So that's basically what you would do. You fill out a list of deductions, and then when we go over here to the Schedule A, the actual form, you see this here, the Schedule A, that's going to be submitted with the tax return. So this is the actual form that will be submitted to the IRS. You can see how some of these numbers came out. So in the medical and dental, there was no deduction, remember, because it's not over that 7.5%. It chose, instead of the sales tax, it chose state and local income tax, which remember were taken from the withholdings from the job. Okay, and then also property taxes for the real estate, for the home right here, and the personal property taxes or the car tags. So that's a deduction right there, $4,145. The big deduction here is this interest you paid, which is the home loan interest of $12,500. That's the biggest deduction on the Schedule A. And then we also have the gifts to charity. Okay, gifts to charity section right here, and we had the $500, then the $250 from the non-cash donation for a total of $750. And then these are all the other expenses, okay, all the work-related expenses, all the miscellaneous and mainly job expenses that we talked about. Okay, so this is the total that we had for expenses, $3,483, but remember, it has to be reduced by that 2% floor, and so the actual deduction included on Schedule A will be $2,483. Okay, now when you add up all these totals, $4,000 here, $12,500 here, $750, this is your, and $2,483, this is your Schedule A, and here's the total itemized deductions. And when we come over here then to the 1040, we can see on this page 2, okay, we can see over here on this line 40, itemized deductions or your standard deduction. So you, again, you want to choose the deduction that is greater. In this case, the itemized deductions is $19,878, is definitely greater than the $5,700 standard deduction, which means that it's beneficial for that taxpayer to itemize. And we can see on the tax summary page how the tax is reduced. Okay, bigger deduction here, itemized deduction, bigger deduction than this deduction, so it's worth itemizing. It benefits the taxpayer to itemize. And to show you this, give you some numbers on it, here's the federal income tax for the year, $3,553, when this taxpayer is itemizing. Now let's go over here, and let's say that this taxpayer was not itemizing deductions and was taking the standard deduction. We can do a little test here. We can say force the standard deduction. So we want to see just how much of an impact it makes to itemize deductions. Okay, you can look down here and now look at the bottom line income tax, $6,350, because now the taxpayer only has this smaller deduction. So tax is almost double without itemizing. Okay, so that's the basics on how you itemize deductions, and also what impact it can make. And the greater impact that something that you do as a tax preparer makes on the finances of your client, the more value that task that you're performing has.